Welcome to the StockManor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson. We didn't get the gap down, the big gap down that I said might happen come Monday, but we kind of got the exact same action, more bearishness in the market. So you can see by the chart in front of you, oops, yeah, it looks like the bulls are starting to lose their footing. Bears are really starting to gain some traction here. So if they want to stop this, you're going to need that whole PPT thing, step in, or whatever, good news, or whatever you want to call it. Something's going to have to change within the markets themselves for anything to come back and help the bulls out now. We are longer term now. And I have been bearish longer term for a while, but things like this just only substantiate my stance in that particular direction. What we see here, this looks very clear to me now, guys. Like just another three down. So I can't, I wouldn't be surprised if we didn't continue the bleeding tomorrow. If you are long this market, you are in for either a very long wait or potentially a very long wait to get back to break even, depending on when you got into the long side. Or B, you're about to blow up your account. So if I can make a suggestion, I would say that you are going to want to be very careful. I'm not going to tell you what to do with your money, but you're going to want to be very careful over the next few days if you have a long position and are holding long and are hoping for it to come back to break even. What you want to watch now is this blue line. See how this blue line held here? This is the blue line you're now going to be watching as we continue downwards. If you take a look here on the Dow, you can see we did break this lower support line and did close below it just at the end of the day. But it's pretty obvious on a daily here what's going on, and that was this major break at 9,900. That was the more aggressive place to get short. And so if you did, you made some money on that today. Good deal. If you were holding overnight, why not? It's so hard to predict things overnight. I wish I'd be able to tell you guys, oh yeah, you're good. We're going to gap down 40 points in the morning, so don't worry about it. You just never know what kind of news is going to come out. So I will tell you, if everything stays the way it is, I think holding overnight on a short position below this 9,900 area is just fine. I wouldn't be too concerned about it. NASDAQ on a 60, you can see it coming back down here now into this 1800-ish area, which is where our other green line is. Notice how well this held on the way back down. And if we look at the daily, where does that put us? Oops, below the 200. This was your opportunity to get in to the short side, right below the 200. I said I would certainly not be scared to do that. So breaks below that was a good chance to get short, and because it didn't give us a big gap down, you had the ability to kind of watch it fall through, which is perfect. It's just what I look for. Daily, okay, it's only Monday, but keep in mind the 50 and the 200 below you as we make our way down this week. SPX on a 60 has not broke its bottom. Very, very close here. This is around that 1045 area I said. Below 1055 for the more aggressive, below 1045. I think also makes us still a good short. If we don't get a huge gap down and watch it roll through, that might be a good chance for you to get in if you didn't already enter today. This was the area right here, that 1055-ish area. So that was a good opportunity to get short if you held overnight. Like I said, I don't think you're in too much trouble right here as it stands. That looks pretty good so far for the Bears. Looks like this might have been a consolidation leading to a move to the downside. SPX on a weekly approaching this lower end. This is where you want to be careful, and this is down around, I don't know, it doesn't have it marked, so I'm going to say 1030, 1035-ish. I don't know exactly where that's at, but I'd be watching that very closely as we work our way down towards it. VIX on a daily also up, not that much, but 3% is still up, which means still fear rolling into the markets. That's what you want to see if you are bearish. You want to see this moving up. It's actually not a bad move overall. It stayed pretty consistent with the market. So we had a move down of about 1% in the market and a move up of about 1% in the VIX. If you are bearish, that's actually what you want to see. That leaves a lot of room to the upside for the VIX to move and give you much more to the downside. Apple on a 60-minute, not able as well to hold itself above this area and crashing back down and through the blue line and the red 200 period moving average. Love the break, the retest and hold, and then the break to the downside. It makes for pretty easy trading in that respect. This was unfortunate for Apple, though, with the markets dropping the way they did, especially the NASDAQ. It was down 2% today, much more than the rest of the markets. And you can see Apple couldn't sustain itself. Had a chance to hold itself above the 20, didn't do it, closed back. Now it's caught between the 50 and the 20, but this isn't. We'll give it another day or two to maybe pull itself back up. I always try to give them the bulls a benefit of the doubt here, but this is not looking good for Apple. As you can see, we are breaking down now below that blue line. That is not good at all. Now this is a weekly, so things don't close until Friday. We saw a couple of breaks and a push above and a break and a push above and a hold above last week, so anything can happen before the end of the week. You never know, but at this point that's not good for Apple to see it breaking below Big Blue. FAS on the 60-minute also breaking down, giving you opportunities to get short based on what we talked about this weekend. From a daily standpoint, you can see here also breaking down below this lower line. Not good for financials. They continue to bleed themselves to death. FAZ up and over these areas, broke the 1650, 1625 to 1650 area, giving you good opportunities to play this to the long side actually in a very beautiful way. Broke up, pulled back today, held, and another move back up. So watching the 1750 area, $18 area is probably your next entry if you haven't caught any of this. You want to be very careful of the 200. However, this could be some sort of an ugly little four wave that we saw back to here. We get breaks up and over that 200. I think that is a good place to get long on FAZ. Maybe even from a swing trader's perspective. And I hate talking about swing trading, FAS and FAZ. But every once in a while, they give you an opportunity to hold overnight in a more conservative way, and that would be it. A break up and above 18, and if it closes above 18 for the day, it might be okay to hold overnight, at least one night on FAZ. That'll do it for today's video, guys. Just more bleeding in the markets. You can see this move down. This looks very pretty from an Elliott wave standpoint of a 1, 2, and now a 3 to the downside. My target ultimately, if I was looking at it, would be this blue line. I have to watch that very closely. So I hope you guys are managing your money well. I hope you're managing your positions well. I hope you're watching the videos. Pass this along to friends, people you know. We've been very, very good in our calls to the downside here, especially our, keeping you guys grounded in neutral to bearish, not allowing you to get too bullish until we break the levels we need to. Guys, I am all about teaching you how to read charts and not how to play your bias. That's for Vegas. Playing your gut, playing your bias, that's all about Vegas. Playing the charts, that's all about trading. So I hope you guys are tuning in. Feel free to check out the other free resources on my site. I don't plug it very often. I hate being the big banner flash guy in your face, but I will tell you this. My subscribers, we've been doing very well there. In my subscribers newsletter, I draw in more trend lines. I talk more about the markets. I've got a lot of extra stuff added in for them. We talk about other indices. We talk more about individual stocks to play when the indices aren't moving well. I have a bunch of other trend lines drawn in that are helping us immensely in our trading. So if it's something you haven't tried yet and have thought about it, give it a whirl. $15 a month gives you a chance to try it out. No need, you don't have to sign up for a year or anything like that, and see if it actually does help you. But I honestly believe it is a value-added service and well worth your time. So if you like the daily videos, if you're getting something from the daily videos, I would invite you to take the next step and try the subscribers videos and see if there's even more you can pick up to teach you and help you in your trading. Then, of course, the creme de la creme is the mentoring. I cannot get through what the mentoring covers in a 15-minute video. It has to be one-on-one. It has to be just you and I working together. There's no videos to watch and then I get back to you later. We sit one-on-one. It's all personalized to your degree of level right now. Whether you've been doing it for 20 years or doing it for 2 months doesn't make a difference. And that is overall the one you want to be in if you really want to get more comfortable with your trading and make your way towards more consistent profits. Okay, guys, I'll wrap it up for today. Have a great one. See you again tomorrow. Bye.